So here's something you're not going to expect a business funding company to say. Listen, you may not need money this summer, at least not yet. Listen, sometimes business funding is absolutely the right move. Sometimes you have an opportunity, there's a gap between payroll and receivables coming in, and sometimes there's just a real need for capital. But other times, business owners are just covering up a problem they haven't diagnosed yet. Bad margins, slow collections, weak payment terms, a job that looked profitable until the checks started to clear. And if you borrow money to fix a problem and you don't fix it, it's just gonna make it more expensive down the road. So today we're gonna go over 4 reasons you shouldn't be borrowing money or shouldn't be borrowing money until you checked these 4 reasons first.
Because I need money is not exactly a strategy. It's a symptom. And if you treat the symptom without understanding the disease, the problem usually comes back with a payment schedule.
Exactly. Let's get into it.
Reason number 1, you don't know what the money is supposed to fix. A lot of owners start with, I need money, and maybe they do, but that's not enough. Why do you need it? Is it because customers are paying late? Because inventory has to be bought before sales come in? Payroll is due before a project pays out? Equipment broke at the worst possible time? Margins too thin? Because old debt is already pulling too much cash out of the business. Those are completely different problems.
Right. I need money generally starts the conversation. And if nobody's asking what the money's for or what the capital is going to be used to fix, that's a red flag in its own, because the answer changes the structure. You see, slow collections may need better payment terms, deposits, receivable support, or a line of credit. Equipment, on the other hand, may need equipment financing. The large projects need funding that matches the project's timeline. And existing debt, that may just need to be consolidated or restructured. And weak margins, that may not be a loan problem at all. That might be a pricing problem wearing a fake mustache.
So before you borrow, define the problem. If you can't clearly explain what the money is supposed to fix, you're probably not ready to borrow yet. You may need capital, but first, you need clarity.
Reason number 2, your margins, they're the real problem. And I know this one's uncomfortable, so obviously we're gonna spend some time here. A business can be busy, but still not making money. More jobs, more customers, more revenue, looks great from the outside. But if you're not charging enough per job and the job costs you more to deliver than you originally expected, more volume, that doesn't fix the problem. It just gives you more of the same problem. Now you're doing more work, you're taking on more stress, and wondering why your bank account doesn't match your effort. That's not a demand problem. That's a margin problem.
Revenue does not automatically mean profit. If your margins are too thin, borrowing may only help you do more low-margin work. That's not growth. That's staying busy with interest. Before borrowing, look at the actual profitability of the work. What does it cost to deliver? What labor is required? What materials are required? What overhead is being ignored? What happens if costs rise? And what happens if the job takes longer than expected? Know your overhead, know your ROI.
And listen, this is where every business owner needs to be honest with themselves. Sometimes, and I hate saying this because I get paid by giving people capital, the answer is not more capital. Sometimes the answer is better job pricing, better job costing, and actually saying no to the jobs that look good on paper but leave lint in your pockets. Not every dollar of revenue deserves applause. Some revenue walks in, eats your margins, and leaves you with a scheduling problem. So if the margins are broken, don't rush to borrow. Just fix the math first.
Reason number 3. Remember that line from Inglourious Bastards? You're borrowing to avoid a hard conversation. This happens more than people admit. Sometimes the business doesn't need debt first. It needs a conversation first. With customers, with vendors, with the team, sometimes with the owner.
Right. Maybe you need to ask for deposits earlier. Maybe you need to follow up on receivables harder. Maybe prices just need to go up. Maybe vendor terms need to be renegotiated. Or just maybe you need to stop taking bad jobs because that top line number looks so exciting. Nobody wakes up and says, you know what would make my day so special today? a tense conversation about payment terms. But sometimes the cheaper move is the uncomfortable one.
Borrowing can be useful, but it shouldn't be used to avoid basic business decisions. If customers consistently pay late, a loan may help for a little while, but the collections problem is still sitting there. If pricing is too low, funding may create temporary relief, but the margin problem remains. If expenses are too high, borrowing may buy time, but it won't make the business healthier by itself.
Exactly. Debt can be a tool, but it shouldn't be a hiding place. If a conversation can reduce pressure, even though it's a hard conversation, have that conversation and don't add another payment. Annoying? Yes. Awkward? Probably. However, it's going to be a cheaper learning lesson and it's going to have less interest, usually. And reason number 4, last but not least, the repayment structure would make the business tighter. This is where a lot of business owners get burned. They focus only on the approval. How much can I get? How fast can I get it? When can the money hit? Fair questions. But they're not the whole decision. The real question is, can the business actually live with the payments?
Payment matters, Matt. The terms matter. The frequency matters. Timing matters. If the payment is too high, too frequent, or disconnected from how cash actually comes into the business, the funding can create more pressure instead of relieving it. Getting approved isn't the same thing as getting the correct structure.
Exactly. The offer, it can look good because the number's big and the approval's fast. But if the repayment structure is being pulled daily or weekly, in the end, the business may end up in a tighter spot than it was before. Remember, the approval is not the win. The structure is the win.
Before you borrow, ask whether the repayment actually fits the business. Can you handle it during a slower week? Can you handle it if a customer pays late? Can you handle it while still covering payroll, vendors, inventory, taxes, and regular operating expenses? If the answer is no, the offer may not be the right offer, even if you technically qualify.
And that's the part business owners need to remember. The lender saying yes doesn't automatically mean the business owner should say yes too. The goal isn't to grab any approval. The goal is to actually get the capital that fits the business's needs and fits the business's payment structure. That's the difference between funding that actually helps and funding that actually will have a for sale sign on your business.
So, should you borrow money this summer? Maybe, but not before you know what the money is supposed to fix. Not if your margins are the real issue, not if you're using debt to avoid a conversation that needs to happen, and if the repayment structure is going to make the business tighter.
Look, we're not anti-funding. We're anti-lazy funding. At Credit Banc, we look at the business's timing, cash flow, use of funds, and more importantly, the repayment structure before you move forward. Because the win isn't just getting approved. The win is getting you the capital that still makes sense after the money hits your bank account.
So before you take an offer, just because it's sitting in front of you, have that conversation. Maybe funding makes sense, maybe it doesn't, but you want to know that before you sign, not 3 withdrawals later.
Book a call with us using a link in the description below, or just shoot us text to somewhere on this screen. There should be a number going by. But more importantly, if you know a business owner who keeps borrowing first and asking questions later, send them this video. Drop a comment. Let us know some of the biggest funding mistakes you've ever seen a business owner do. We'll talk to you soon.
Remember, borrowing should solve a problem. It shouldn't become the next one. See you back here soon.